The topic dominating the news locally and across the country is the collapse of Silicon Valley Bank. More importantly, people locally are asking the question, what does the collapse of Silicon Valley Bank mean for Silicon Valley real estate? I'm Melanie Giacomo with Real Estate Experts, and today we are going to talk about that and more in our spring market update and forecast. But before we do, I want to acknowledge you for taking the time to watch this update, because the current change in the market works in favor of the educated buyer and seller. But to understand the implications of Silicon Valley Bank collapse, we need to take a step back and do a little history lesson about Silicon Valley real estate. What you are looking at here is the last 40 years of Bay Area real estate appreciation surges and declines, going all the way back to 1984. One thing for sure that we can say about Bay Area real estate market is that we've gone through some major crises over the years and that our market is incredibly resilient. So going back to our first correction in 1991 was a recession where rates jumped to 8.5% to 9.5%. And at that time, we saw the prices correct about 11%. The next major crash we had was the dot-com crash between 1999 and 2001. And at that time, the NASDAQ stock market dropped as much as 65%. But just to give you a little idea and some contrast, our recent stock market decline dropped only 35%. Our next major event was the Great Recession and housing crash of 2008, where Bay Area home prices dropped 27%. And then most recently in 2018, we had a correction when the Federal Reserve started increasing interest rates and pulling money out of circulation, at which time Facebook, Apple, Amazon, Netflix, and Google, all of those stocks dropped dramatically, and prices in the Bay Area corrected about 8%. So two things we can conclude from this, and that is that one, our market is incredibly resilient. And the second is that our average correction outside of the Great Recession is around 10%. So where are we today? Well, we saw that prices peaked about 1 year ago. It was actually March 18th when prices peaked in Santa Clara County at $964 a square foot. And prices have come down 10.7%. Now, prices bottomed in January. And if you've been watching our market updates, one of the things we mentioned at the turn of the year was, if you've been waiting for prices to come down and rates to pull back, this may very well be the market that you've been waiting for. And what we can say is that the market did in fact bottom at that time. And right now, prices are on their way back up. They had come down to close to 11%, and they are already back up in some areas between 5 and 6%. One of the things that is a looming headwind is inflation, because inflation has been stubborn. And in fact, in spite of the Federal Reserve's dramatic increases in interest rates, so far, key inflation indicators show that inflation has not decreased as much as anticipated, causing the Fed to want to stay the course until inflation subsides. Until, however, what the news we've heard last week about the major run on Silicon Valley Bank. Now, the Federal Reserve theoretically caused the collapse of Silicon Valley Bank by raising interest rates. And so for that reason, now this is a headline from the Wall Street Journal saying, the collapse of Silicon Valley Bank calls the Fed interest rate path into question. So the Fed is now questioning whether their strategy will or will not be pushing the pause button into further interest rate increases. So a pause in mortgage rate increases will give more buyers the confidence to purchase this spring, adding to the positive market recovery that we've already been seeing in the Bay Area real estate. So what does all this mean? And where is the market headed? Well, here is the forecast for the spring. Rates will decrease as the Fed eases up on their policy. Demand will increase because seasonally, the springtime is when we see all of the buyers come out. Now, if you're a buyer, it's not all bad news because supply will also increase because springtime is the time of the year when most sellers put their home on the market. And in addition, because interest rates will either be put on pause or we might see rates decrease slightly, this will likely give another uplift to the market, giving us another rise from 3 to 5% in price from where they are today. So the question is this the right time to buy? Well, what we can say is Bay Area real estate, looking at that long-term chart, has gone on sale 4 times in the last 40 years. And this is the 5th time. So if you're thinking of buying, now is in fact a great time to get into the market. We have more inventory coming to the market. We're seeing a pause in interest rates, and this very, very well could be the window that you've been waiting for. If you're a seller, although we haven't quite recovered to the previous highs of the last year, one thing to consider is that the market you're selling into is also the market that you're buying into. Although you will be selling a home potentially for less than the top of the market, you will also be buying a home at less than the top of the market. And the advantage there is that your property taxes will be lower for the duration of the time that you purchase and own that property. So whether you're thinking of buying or selling, we are here to help. I am Melanie Giacomo with Real Estate Experts, and I'm just one call away.